Well, hi guys, welcome to this Money Control live feed. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the cues for trade, all the global cues coming in this morning, what to expect from the Nifty going forward in the session. A lot of stocks in focus, so we'll be getting you a technical view on that. And of course, if you have any stock-related queries, send them in to us on our YouTube feed and we will have them addressed by our technical expert. But before we do all that, let's take a look at the top headlines at this hour. Wall Street slumps following Moody's downgrade of several regional banks. The US volatility index hits the highest level since late May. In fact, European markets too ended lower as Italian bank shares take a hit after surprise windfall tax announcement. Asian markets trade lower as China slides into deflation for the first time since 2021. In fact, Chinese retail inflation drops 0.3%, while producer price index fell 4.4% in the month of July. The GIFT Nifty is suggesting a flat start for the Indian markets. Oil prices steady with Brent trading around levels of $86 per barrel despite bearish China crude export and import data. Gold prices dropped to a near one-month low as the US dollar rallies. And in important earnings to track today, Tata Power, Zee Entertainment, Berger Paints, Bharat Forge and IRCTC are all expected to report their first quarter numbers throughout the day. And on the show, we'll also put the spotlight on Adani Enterprises, ICICI Lombard, data patterns and Coal India, among others. Of course, we'll also be getting you a view on the pharma basket and what to do with the stocks going forward, given the fact that the pharma index has staged a very smart comeback in the second half of the year. Let me first get on board our technical expert for today, Hemen Kapadia of KR Choksey Securities, joining in this morning. Good morning, Hemen. Good to have you on the show as always. We want to get in your thoughts on the Nifty and the kind of support levels to watch out for, given the fact that we've seen quite a bit of volatility setting in over the last few sessions. We have the US inflation data to watch out for and the RBI MPC meet outcome tomorrow. So would you say that the volatility would persist ahead of crucial data coming in there?
A very good morning to you, Nandita. Thank you for having me on the show. Such a pleasure. I think, like you said, the volatility is there. It hasn't been that much in the sense in terms of the VIX going up, Nandita, but yes, it has, it used to be at least sub 11 for the better part of last week. We have slowly creeped up to just above 11. So yes, I think, but I also believe that our credit policy meeting, I think somewhere things are already discounted, and it would be a surprise if they do not go neutral and raise rates again. So, frankly speaking, somewhere it has been built in. But yes, the volatility is there. I mean, you have the US downgrading almost 10 mid and small size banks. That has led to a spike in VIX and Dow Jones coming off yesterday. So, there are a little bit of things on the boil. Hopefully, it does not percolate down too much to India. We've done relatively well. And yes, we are also consolidating after a 3,000 point run, Nandita. So I'd say everything else, we are okay placed. Not very exciting, simply because we've had a brilliant run up and we need to consolidate a better terms of time and price.
All right, consolidation of course has set in and we need to cool off from the kind of rally that we've seen. Hemen, hold that thought. We'll come back to you and discuss specific stocks in a bit. But let me also bring on board my next guest for today. Joining me is Nithya Balasubramanian, who's the Director of Healthcare Research at Sanford Bernstein. Good morning, Nithya. Good to have you on the show. Let me first talk to you about Cipla. Given the fact that there's a lot of buzz around promoter stake sale to PE giants, I want to get in your thought as to what a complete exit by promoters means for Cipla and how would it lead to value unlocking when it comes to the shareholders?
I think the promoters' succession has been a question that a lot of investors have been asking about Cipla for a while now. We know Samina Hamid was involved in the business, but again, operational control has been fully with the professional CEO for a while now. But I suppose, given that the promoters, Dr. Hamid and Mr. Hamid, are actually pushing 90, they probably just want a clean break now. And for a private equity, I think we do not see too many quick wins. It's a fairly well-run ship. I think in the last few years, we have seen margins improve as well. Costs have been fairly stable. So I'm not sure how much value can be unlocked by just running a tighter ship, right? I'm not sure there is so much more that a PE can do in terms of extracting more operational efficiencies. which means that they might actually have to think about a bit more drastic changes to the business model to be able to unlock value. One of the exercise I'm sure any PE investor would do is to look at if these different businesses that Cipla is participating in, which is the US generics business, the India branded generics business, what if these were to be split out and if they were to trade separately? So we know that given the kind of exuberance we are seeing for some of the pure play domestic names like Mankind, Abbott, the kind of multiples and the valuations that the market is willing to award, I'm sure one exercise an investor would look at is if we were to spin out India business, what would it look like? And what do you do with the rest of the pieces is the natural next step to that question. So I think therefore, for PE investors, I would imagine looking at these different businesses as individual wholes is, I'm sure, an exercise that they will undertake. And given where the multiples are for some of the pure plays, I think it can unlock significant value.
Right, that was about Cipla, but talking about the pharma pack as a whole, a lot of experts I had spoken to in the earlier part of the year had said that pharma will emerge as a dark horse later in the year, which is exactly what has happened given the fact that this index has, clocked in a rally of over 20% on a YTD basis. Earnings have been pretty healthy this quarter for major players, and regulatory concerns for the likes of Lupin have eased given the fact that, two of its units, Goa and Pithampur, have seen issues with US FDA getting resolved rather. So, a lot of approvals also coming in when it comes to some of these pharma giants. Would you say the sector is now ripe for re-rating? And, where do you see the big delta emerge now next?
We've already seen a significant re-rating happen in the sector, and it's been led by multiple tailwinds, both in the India business as well as the US generics business. When it comes to the India business, people have been able to enjoy slightly better gross margins because of the higher price hikes in NLEM portfolio. We have seen there is some expectation that the PLI scheme will play out favorably with Indian companies having far more control over the supply chain. And a lot of the investment in terms of manpower expansion is already in the base, which means you only have productivity improvements to look forward to. So I think the market is therefore expecting that we will see several years of secular earnings growth in India. When it comes to the US as well, the generics prices seem to be fairly stable. And I think that's a commentary now that's been consistent across players, at least this earnings season. And we also keep hearing about intermittent supply issues. So as long as these keep cropping up, I think wholesalers in the US will want to prioritize supply over, squeezing generics for further pricing discounts. So I think at least for the next couple of quarters, the market seems to believe that there is only upside in terms of earnings from here on. Our own view is that we are still not sure if the US generic tailwind is a structural tailwind. Of course, we need to wait and see what happens if the pricing levels are actually sustained. But the market sentiment is definitely turned. In terms of whether there is more room from here on, I think it now has to be stock specific. We need to see some products catalyst to play out. For Cipla, for example, we would want to see approvals come through for some of the complex generics in the US, Advair, Abraxane. Sun, similarly, whenever Duroxolidinib gets approved and what form and shape that approval takes will again give us some sense of the next leg of growth. So I think at these levels, we would say that it's now stock specific and we need to see some specific product catalyst play out for the needle to move.
Right, since you spoke about, it being stock specific, I want to get in your thoughts on Gland Pharma, given the fact that, the US business has picked up momentum. And the recent acquisition that it made, the Cenexi acquisition, is working pretty well for Gland. Can one say with conviction that the worst is over for Gland? We had seen some bit of pain coming in after exit of two clients and, Chinese competitors' pricing pressure as well. But now, can we say that the recovery is on track when it comes to Gland Pharma?
It's the worst over. We think so. I think we also track their market shares in the US market on a monthly basis. And we have been saying that for the last several quarters that they saw the trough probably last year. And since then, market shares have been moving up a little to being stable. But have they come back to the kind of market shares that we saw in FY 21-22? Not yet, right? For that to happen, I think the competitive intensity in the end market has to come off. Now, the stock had actually corrected quite significantly. And I think at those levels, when it had hit 900 levels, since then we have been talking about how this is a tactical buy. And we see in subsequent quarters, earnings will accelerate. They have brought back some of the molecules that they were not selling by finding alternate partners to sell it through. So we think those products will again support growth in FY24. And we see some base molecules as well providing them support. So for the next few quarters, yes, we do see earnings momentum continuing. But for the end market competitive intensity to change, we want to see what happens when FDA goes knocking to the facilities of some of the Chinese competitors. So Chinese competitors haven't been inspected since 2019. We know FDA is on the ground in China this year. We are, of course, very closely watching what happens with their facilities. If they get into trouble, it's both a near-term opportunity for Gland because they will want to transfer products to a Gland, which is a very compliant player. And also, hopefully, that means that the market will settle down at a lower competitive intensity level.
All right, then that's the view on Gland. I wish we could carry on with this conversation, Nithya, but we're running out of time. And I would like to thank you for taking out time and joining in and sharing your thoughts with us. It was a pleasure.
Thank you so much for having me.
Thank you. Thanks a lot. Well, let me get back to Hemen then and talk about specific stocks. Hemen, I want to get in your thoughts on data patterns. It's a stock of the day, according to me, given the fact that it has reported very strong earnings, 80% jump in profit on higher other income, and strong top-line growth of 31% or thereabouts on a YY basis. Look at the stock. Of course, it has run up a fair bit this year itself, 60% or thereabouts, and yesterday it ended near the high point of the day. On the charts, would you say it could comfortably achieve the 52-week highs of 2250 or thereabouts in, say, probably a couple of weeks?
Absolutely, Nandita. I think you're bang on about this because, firstly, we remain safely ensconced in a intermediate uptrend. We walked into small correction. Support comes in at 1950. A close about 2100 would, like you said, Nandita, a close about 2100 would open the doors and trigger off an upside to a fresh all-time high about 2250. So, okay, a little bit of a caveat in the sense we have limited data. It's a relatively new listing. We probably have a year or more data, but whatever data we have seems to indicate that yes, so what you said is absolutely on the anvil. A week or two, or maybe 3 to 4 weeks, Nandita. Yes, setup is positive. We've walked in a small correction, which I believe is on the verge of coming to an end, and the trend seems set to resume, especially above 2100.
All right, that's the view on data patterns. Then I want to take up another results candidate, that's Siemens. It came out with its numbers yesterday. We have a query coming in on this counter from Debu K. Wants to know if this is the right time to invest in the stock or not. Looking at the earnings, net profit up 50%. That's a beat on estimates, but margins have come in below estimates. So mixed sort of numbers, and the stock has been, has been seeing some bit of correction in the last 5 or 6 trading sessions. Should one look at buying into it on dips right now?
We seem slightly inconclusive in terms of a trending bias, like you mentioned, because we've had a phenomenal run-up, humongous, and we're sitting on top of the rise and trying to adjust it. So I would suggest that if you would want to invest, please do it in bits and pieces. Don't go the whole hog in the first attempt, because yes, somewhere there seems to be a correction which has crept in, but the undercurrent in Siemens is so positive, Nandita, that frankly speaking, we should have been somewhere closer to 3,300 right now, keeping in mind that we have moved up from 950 to 4,050 continuously for the last 3.5 years. So solid undercurrent, corrective, but the correction is, not typically a downside correction. It's correcting sideways. So yes, we are at 3,780. So one were to invest. Levels are 3,700, 3,600, and 3,510. These are few levels you can, do it in a SIP or a sort of a bits and pieces manner, not completely.
Right, that's the view on Siemens. Hope that answers your query. But let me also talk about Coal India. Numbers came out yesterday. Profits have dropped 10%, but nevertheless, it has beaten expectations when it comes to analyst estimates. Raju Sabu wants to know your thoughts on this stock. Stock is just about 30 odd rupees away from 52-week highs, but it's been in a state of consolidation. as I can see over the last 1 month or thereabouts. What would you advise investors to do on this one?
Well, frankly speaking, Nandita, if you look at a slightly bigger time frame, the 1 month correction that you mentioned is absolutely on. But if I look at the monthly chart, this transforms into a 8 month correction, Nandita. So we've gone nowhere. It's been range bound between 210 on the downside and around 247 on the upside. Yeah, and it hasn't done much. Traditionally, it's been a slow moving stock. First time in years it has done what it has done. So not very exciting. And once again, there isn't a clear trending bias. It's completely flat. And Nandita, after 8 months of a sideways movement, you would either need a close about 247, 248 for an upside breakout to come in. And if that doesn't happen, we need for it to close below 210. So frankly speaking, it's in no man's land. I would say take action only if it goes above or below these levels.
Right, that's the view. Let me also talk about SBI Life, Hemen. What's happening here? The stock has been up quite a bit. Yesterday it was up 4%. Last 5 sessions it has given a return of 7% or thereabouts. We have a query coming in on from MS rather. Would you advise investors to book out at the juncture, book partial profits, or sit on it right now?
No, I would say sit on it, Nandita. It's firing on jet boosters, so to speak. 2.5 years of a consolidation, Nandita, and now we are breaking out from this range. The range was between 1020 on the downside and 1340 on the upside. So after 2.5 years of consolidating, and that's big time frame, Nandita, we have now posted a fresh all-time high. Okay, I am taking monthly levels and I'm talking about monthly charts, and we are just still in the first week of August. Frankly speaking, these would be valid at the end of August when the monthly charts are being formed and completed. But all-time highs, 2.5 years of consolidation, I'd say it seems like a clear hold. Unless there is something else that I'm missing out on, I do not see why the stock wouldn't cross 1500 in the next few months.
Right, expect levels of 1500 in the next few months. If you have any positions, hold on to it. Let me also get in a query on Trident. Then Vishal Thakkar wants to know your thoughts. This stock has been fairly volatile. Over the last 5 sessions, down just about 1.5%, but it's just managed to come off its 52-week lows. On the charts, where do you see this heading?
Firstly, Nandita, downside appears limited. 31.5 is decent support. Next support level comes in at 30.25. Thing is, it turned out to be a multi-bagger, Nandita, when the stock moved from roughly 3.75 to 70 from March 2020 to around mid 2021. So, I mean, the stock turned out to be 20x. Now, because of that great move, we walked into a correction of a greater degree. So, once again, downside appears limited, but yes, if we do want to see some upside action, the first level to overcome is 35.40 and the next weekly level is 36.85. I think above these levels, I think the stock should get some mojo back and we see upside coming in. So as of now, I think it has given a decent correction and it is setting this platform for an upside. But these levels need to be overcome for these anticipated positives to unfold, Nandita.
Right, that's the view on Trident. I want to get in your thoughts on Adani Group of stocks, Hemen, given the fact that there are reports saying that Adani Enterprises is looking to exit the joint venture it has with Wilmer. That's according to reports. And Adani Ports reported great set of numbers yesterday. In fact, if you look at the brokerage verdict, most of them are positive on the stock. Citi has a buy rating, target price of 972 rupees or thereabouts. It says that there is an upside risk to FY24 volume guidance. Goldman Sachs also has a buy rating, target price of 820 rupees. It says the guidance is well within range and it's a good quarter for Adani Ports despite disruptions. Jefferies as well has a buy rating, target price of 890 rupees per share, and it has raised its FY24, FY25 EBITDA estimates by 3 to 5%. In the Adani Group of stocks, of course, we know that they have staged a very smart rebound from January lows. But among the entire pack, Adani Enterprises, Adani Ports, which one is looking more attractive now?
I think Adani Ports looks positively interesting, Nandita. Like I said, great numbers. 800 is the level to watch out for. Above 800, we'd start seeing the stock gain momentum. But coming back to your question, I think all of the Adani stocks, Adani Enterprises, Adani Port, Power, Transmission, except Green Energy and Total and Wilmar, all of these above are looking interesting. But yes, if I have to pick and choose between Adani Enterprises and Adani Ports, I would clearly pick Adani Port. Looks promising, especially above 800.
All right, that's the view of the Adani Group of stocks. I want to quickly squeeze in a couple of more queries that are trickling in this morning. Anihar wants to know your thoughts on UPL. Now, this is one stock that has been consistently hitting 52-week lows. Should one exit out of it, or average it out, or what should one do?
Well, 2.5 years of, frankly speaking, doing nothing, or maybe that's, yeah, we've gone nowhere. Distinct downward bias, but we are at very strong monthly support. So I would say hold on a bit, especially if you have a slightly longer term point of view. 588 has been very important support. The last time we closed below 588 on the monthly chart was in February 2021. Nandita. Since then, okay, there is a negative bias. We've underperformed miserably, frankly speaking. But I believe we are at important monthly support. So I would say hold on for a bit more. If it gives a decisive close above this level, yes, I would be worried and I would consider an exit. But otherwise, wait a bit. Some sort of stability is just about creeping in. But I'll have a more clear view at the end of the month when the monthly charts unfold. But as of now, a slightly risky, but I have a feeling that we are at a congestion area, and this level has seen major activity in 2019 and 2018 and 17. So we are at very important supports. Hold as of now.
Right, hold is the call on UPL. Hope that answers your query. Quickly want to get in your thoughts on Sri Renuka Sugar. There is a query on our feed. Nithpal Singh wants to know your thoughts. I think yesterday it was down a fair bit, somewhere around 3% or thereabouts. What are the short-term targets you'll be watching out for on this stock?
6 months of a sideways movement, Nandita. It's been meandering aimlessly and nothing much happening. So for something positive to happen on the medium-term charts, I'm not telling you short-term because it's gone nowhere. And after 6 months, we would need a close above 48.55 on the weekly charts. That happens, your target would be 52 and 55. The setup isn't bad, but somehow it just isn't delivering actually. I have seen experience has shown that normally when the sugar sector makes a move, it's always on the coattails of Balrampur Chini. Balrampur Chini moves and everything else follows. Now Balrampur hasn't gone nowhere once again the last 8 months or so. So yes, standalone Renuka looks a bit better, but overall from the sector point of view, if Balrampur moves, everything moves. But Renuka above 48.55 looks good.
All right, that's the view on the sugar pack then, but I'm afraid we are running out of time. No more queries for today, but if we couldn't answer your query, do send them in to us tomorrow. We'll try and take it up. With that, Hemen, before I let you go, leave us with some stock recommendations for our viewers.
Firstly, a buy call on Biocon. Nandita, after we are getting back to a slightly similar time frame, after 2.5 years of doing nothing and woefully underperforming, abysmal, I'd say. Now we're staged a good comeback. A monthly chart reversal looks good. So buy on Biocon at 270. The US markets have come off a bit, so that's why the level that's 2 or 3 rupees lower than yesterday's closing. So one can buy Biocon at 270. Stop loss 255, target 300. It's not an intraday call, it's a positional call. And it is a conservative call. I believe there is significant headroom over the next year or two. The other stock is Rallies India. It has made a medium-term bottom, positive divergence. You have the mechanical indicators giving a crossover buy. 55-day moving average is closing above. So Rallies India, from a positional point of view, one can buy Rallies at 220, stop loss 210, target 240, and once again slightly conservative. I believe a longer term bottom is in place, and we should be gravitating towards 250 and 300 over the next 9 to 12 months.
All right, Biocon and Rallis India, two stock recommendations coming in from Hemen. With that, Hemen, thanks a lot for joining in as always and addressing all of your queries as well. Look forward to having you again on the show soon. But before we let you go, here's a programming note. Well, we have the L&T AGM today, which will be taking place. But why is it so significant? Well, that's because it will be AM Naik's last address to shareholders as he steps down from his 6-decade-long career. Well, we have the man speak exclusively to Money Control, and Rachita Prasad, my colleague, caught up with him. We'll be getting you. In fact, we will be getting you a live interview with him at 10 a.m. So don't miss the interview where he takes a look back at his 6-decade-long journey at L&T. So tune in live at 10 a.m. and watch that exclusive interview. Well, with that, it's a wrap on this edition of Morning Trade from me and the entire team that put the show together. Thanks a lot for watching, but don't go anywhere because coming up next is Opening Bell.